Good morning, Paul Georgie from Allendale. It's August 1st, the beginning of a new month, Wednesday morning, and we've seen a little profit taking in the grains, maybe a little bit of early month selling here, but part of it could be because the way we're reading the weather reports here this morning, it looks like they've added a little more moisture into the forecast again, giving better chances of rain for the central Midwest later on this weekend, which is a little bit different than what they put out last night. So the weather continuing to be a cause for volatility here in the marketplace. I think other news such as outside market news, like the China PMI came out with the some weak numbers there, again showing a slowing economy and maybe giving reason to lack of buying interest for corn and soybeans by China here over the last few weeks, and that is a reason for some profit taking here this morning. Some other news that we've got to focus on today is the Fed meeting will end here this morning. We'll get some minutes out here of that meeting later this morning, and then a comment around the 1:15 time frame. Traders are watching that and expecting that there could be some type of announcement of a QE3 type funding that the Fed may put out. So that is creating some anticipation here as we move forward this morning. We also have the European Central Bank meeting tomorrow. There's some concern there over their chairman's comments earlier in the week that they would do anything to meet the and support the euro. That is creating some turmoil there and some hype and reason for that to watch that meeting very closely. We've also got Greece saying that they are running out of cash. So that is the European situation by no means is calmed down. It's still a very tense situation, and we'll watch that closely as we move forward here this week. The demand side of the equation continues to be a problem. We're seeing normal U.S. buyers of corn go elsewhere. Main reason is they're going to Brazil, where corn prices are anywhere from $35 to $40 a ton cheaper than the U.S. corn. And because of that, we're seeing basis levels at the Gulf continue to deteriorate for corn and for soybeans, as there hasn't been anybody looking for beans or buying beans here lately. So we'll be watching tomorrow morning's USDA weekly export sales numbers very closely to give us an idea on what kind of demand loss we're really seeing here in the corn and soybeans. In the livestock markets, cutout values there were quiet. Cash cattle at a standstill yesterday. The choice was up 20 cents, select up 31. Pork cutout values were unchanged yesterday. And what we're seeing in the cattle trade is that normally we do see a seasonal bottom in pricing here in the product, where we should see some improvement in demand as we move into early August and into the fall, as school programs and so forth get back into the buying mode, which could help us with the cutout values and hopefully help fed cattle prices. This morning we're seeing cattle futures and hog futures basically steady, and feeder cattle prices higher, just mainly off of the weaker corn prices here today. So stay in touch with Allendale Research. We want to remind everybody that we've got a few more days left on this Allendale Research special. Take a look at the home page for all the details, and if you want to sign up for that, you can give us a call or just sign up online. Our number here is 800-262-7538. We wish everybody a very successful trading day, and I will talk to you tomorrow morning.